Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at PoE technologies.
If you find our talks useful, please consider subscribe, like, and comment underneath.
Yeah, and we've got a really compelling one for you today.
We really do. Today we have a pretty fascinating mission. We're stepping right into the incredibly high-stakes, high-growth world of the AI infrastructure build-out.
Right into the plumbing of it all.
Exactly. Specifically, we're looking at a major player in the AI optical connectivity space, which is PoE technologies.
And this is a space that is just heating up.
It is. Right now, this stock has a remarkably bullish investment thesis. We're talking a solid 7.5 out of 10 score on our end.
Which is not something we see every day in the sector.
No, it's not. What we're really looking at here is a classic asymmetric upside opportunity. So for those of you looking to position yourselves in the next, massive wave of the AI build-out.
This is definitely a company that demands your attention.
Absolutely.
Yeah.
You risk a little to potentially gain a lot.
Huh.
Provided you actually understand the mechanics of what they're building.
That's the key, right? Because when you look at the current landscape, everybody's talking about the flashy stuff.
The consumer-facing software.
Right, the software, or the massive data centers in the desert, or those wildly expensive advanced chips. But there is this silent, almost invisible revolution happening beneath all of that.
In the physical layer.
Exactly. The physical layer that connects these massive systems together, that is the exact space PoE occupies.
And understanding that gives you a massive advantage as an investor.
Yeah.
You're looking where the mainstream money hasn't fully focused yet.
Exactly.
Okay, let's unpack this. What does PoE technologies actually make? Because I want to make sure you really grasp the physical reality of this.
It's important to visualize it.
Yeah. At the very core of their business are their proprietary Teralight optical engines.
And just to clarify, these aren't run-of-the-mill components.
Right, you can't just buy these off a shelf at an electronics store. These are highly specialized engines designed specifically for AI-scale data center applications.
We're talking about the actual hardware that physically allows these artificial intelligence systems to talk to each other.
At the speed of light. Literally.
Literally at the speed of light.
But why is that specific piece of hardware suddenly the most important thing in the room?
Well, to understand why that's so critical for you to care about, you have to look at the massive dual mandate that AI hyperscalers are facing right now.
And by hyperscalers, we mean the giants.
The absolute giants. The massive cloud computing providers building the future's infrastructure, they are caught in a tremendous, almost an impossible bind right now.
How so?
Well, on one hand, they need incredible, unprecedented capability. The sheer volume of data required to train and run modern AI is staggering. We aren't sending text emails anymore. We are processing billions of parameters a second.
The computational demand is just completely off the charts.
Precisely. But on the other hand, they desperately need massive capital expenditure efficiency. They cannot simply throw infinite amounts of money at inefficient hardware.
That will bankrupt them.
Exactly. Currently, the critical bottleneck in scaling AI infrastructure isn't the software.
And it isn't even the chips themselves, is it?
No. It is actually the physical connection between the chips. The processing power is there, but getting the data from point A to point B without melting the servers.
Wait, melting the servers?
Oh, yeah.
Is it really generating that much physical heat?
Absolutely. Think about how hot your personal laptop gets when you try to run a high-end video game or render a 4K video.
The fan sounds like a jet engine.
Right. Now multiply that by 1,000,000. Traditionally, data centers have used copper wires to connect everything. But copper has physical limits.
Because of the electrical resistance.
Exactly. When you push that much data through copper, it encounters resistance, and that creates massive amounts of thermal load, heat.
Which means you need staggering amounts of electricity just to cool the room down.
Exactly. Copper wires simply cannot handle the bandwidth and the thermal load of the AI era anymore. You need optical interconnects.
You need to transmit data using light instead of electricity.
Yes.
I mean, that sounds like something straight out of Star Trek. Using light to transmit data instead of standard wiring. But surely, if this is the obvious solution, the big tech giants can just make these optical interconnects themselves, right?
You'd think so.
Can a massive company just copy what PoE is doing?
If we connect this to the bigger picture, designing these optical engines is not something a competitor can just decide to do overnight.
It's not just a software update.
No, it requires incredibly deep, highly defensible expertise in a few extremely complex fields. We're talking photonics, semiconductor integration, and thermal management.
You're manipulating light at a microscopic scale.
Right, and integrating that delicate process with traditional silicon chips and ensuring the whole package doesn't overheat or degrade, it is incredibly difficult to manufacture at scale.
So that creates the moat.
A massive, durable, competitive moat against commoditization. Smaller companies simply cannot replicate this easily.
And even the giants struggle to do it efficiently in-house.
Exactly.
And it seems like the broader industry is absolutely recognizing this moat. It isn't just a theoretical advantage on a whiteboard somewhere.
Not at all. Look at the awards.
Right. POET's Teralite engines just won an elite score and a category win from the Lightwave Innovation Review. And what's amazing to me is that this isn't a one-off fluke.
No, this is their second consecutive year winning this accolade.
Right. When the leading industry experts repeatedly validate your tech as groundbreaking, you know you have something special.
And that's not even mentioning their partnerships.
Exactly. They recently announced a collaboration with quantum computing to co-develop optical engines for next-gen AI connectivity.
And the speeds they are targeting there are just incredible.
3.2 terabits per second. Just to ground that for you listening, 3.2 terabits per second is essentially like downloading the entire Netflix 4K catalog in the blink of an eye.
It's just mind-boggling scale. To use an analogy, think of the new AI chips as the fastest Ferraris ever built.
Okay.
But right now, they are being forced to drive on a one-lane dirt road.
The copper wiring.
Exactly. What POET is doing is building the multi-lane fiber optic superhighways that will allow those Ferraris to actually drive at their top speeds.
Without this exact technology, the entire AI revolution hits a literal physical speed limit.
Exactly.
I love that analogy. It perfectly paints the picture of the bottleneck.
Yeah.
But as with any investment, we have to look under the hood at the financials.
The numbers have to make sense.
Right. We can't just get swept up in the cool technology. And I have to be completely honest with you. I was looking at their financials before we started recording it. My jaw dropped.
For the wrong reasons, I'm guessing.
For all the wrong reasons. They are burning tens of millions of dollars, but they are barely making anything right now.
Let's look at the specifics.
Yeah. I'm seeing Q2 2025 revenue. It's just $0.27 million.
Which missed the 0.39 million estimate.
Exactly. And annual recorded revenue is just $40,000. Trailing EPS is negative 72 cents. And the company has a net income of negative $56.70 million.
It's a tough pill to swallow at first glance.
When you see a company bringing in thousands but burning millions, the natural instinct is to run for the hills. Talk me off the ledge here. How is this not a massive red flag?
It is a completely natural reaction, and frankly, it's the exact reason why a lot of retail investors overlook opportunities like this. But let me step in here as the calm voice of reason.
Please do.
What you are looking at is textbook, classic early-stage tech behavior.
Okay.
You cannot evaluate a deeply technical hardware company like this the way you would evaluate, say, a mature retail chain.
Or a sauce company.
Right. They are actively in that crucial, painful transition phase from pure research and development into actual commercialization.
So you're saying they had to bleed cash to build the moat in the first place?
Exactly. They've spent the money to build that massive moat, to invent the proprietary tech, to secure the global patents. Now let's look at the forward projections.
Which are a lot better.
They are staggering once they cross that commercialization threshold. Revenue is expected to grow by 146.1% per annum.
Wow.
Earnings are projected to grow by 68.3% per annum.
And EPS.
EPS by 91.8% per annum. In fact, consensus estimates project an EPS improvement from a 45-cent loss to a 39-cent loss per share in the forward year.
That's a 13% reduction in per-share losses.
Exactly. It signals a very clear, mathematically sound path toward profitability.
Okay, I see what you're saying. It's about the vector, the direction they are heading. And when I dug a little deeper past the headline losses, I noticed that POET actually maintains very manageable debt levels, which is crucial. Yeah, they have the financial flexibility to survive this transition right now. Furthermore, they have a remarkably strong gross margin.
Which is rare for a hardware company at this stage.
Right. In manufacturing physical hardware, especially optical engines, where microscopic precision is everything, a strong gross margin is a massive green light. It tells us that their underlying operational efficiency in manufacturing is what will eventually drive their profitability.
Precisely. You are paying for the R&D right now, but the manufacturing infrastructure is sound. When the hyperscalers finally flip the switch and start ordering in massive
Right.
volumes,
Volume design wins.
right, the profit margins on each unit will be robust. The hard part of figuring out how to make them profitably has already been solved.
Here's where it gets really interesting,
Yeah.
because the market is absolutely starting to wake up to this exact dynamic.
Oh, definitely.
Just yesterday, on March 2nd, 2026, the stock rallied 12.75% to close at $6.76.
A massive jump.
Huge. Now, there were two major catalysts behind this jump. The first, as we mentioned, was the Lightwave Innovation Award announcement.
Validation of the tech.
Exactly. But the second, and arguably more impactful catalyst, was the disclosure that the hedge fund MMCFP International became a significant shareholder.
Now, this is a pivotal moment for anyone watching this stock. Let me explain why this matters so much to you as an investor. Hedge funds do not just wake up, throw a dart at a board, and throw millions at an illiquid microcap stock on a whim.
They do their homework.
They typically conduct 6 to 12 months of rigorous, exhaustive due diligence before taking these kinds of positions.
Right. Interviewing independent engineers, deeply analyzing the patent portfolio.
Exactly. Modeling out total addressable markets, and quite frankly, talking to the hyperscalers themselves to see what they plan to buy. The fact that MMCF took this position before the award announcement was made public signals deep conviction in POET's fundamentals.
This is not just momentum chasing.
No, this is sophisticated, institutional, smart money planting their flag.
I hear that, but let me play devil's advocate for a second. Hedge funds get it wrong all the time.
Sure they do.
How do we know MMCAP is actually onto something real here, and not just placing a speculative gamble on a microcap?
That is a fair challenge, but you have to look at the broader context of the sector. Broader market sentiment is shifting from bearish dilution fears to bullish validation.
It certainly helps that the stock was recently included in Seeking Alpha's undercover dozen analyst discovery list.
Exactly. When independent analysts and institutional money both start discovering a stock simultaneously, a re-rating usually follows.
And it perfectly aligns with what we're seeing in the macro environment. The entire optical interconnect sector just got a massive shot of adrenaline.
The NVIDIA news.
Yes. NVIDIA's recent optical technology partnership with Coherent has lifted the entire optical interconnect sector.
It was a massive rising tide lifting all boats.
Right. It validates the megatrend. NVIDIA essentially stood up and told the global market that optical interconnects are the definitive future of AI infrastructure.
Which benefits pure-play designers like POET immensely.
Because it proves their entire foundational business thesis is dead on.
Exactly. The market now knows for a fact that fiber optics are replacing copper in the data center. The only question left is who supplies the best engines.
But we always want to make sure you get the full, balanced picture on this show. We can't just talk about superhighways and massive upside without asking the tough questions.
You have to look at the bear case.
Exactly. Let's talk about the risks and do a reality check. What goes wrong here?
It is vital to look at the risks objectively. There are two major risks you must be acutely aware of. The first is revenue execution and design win delays.
Because the current revenue base is negligible.
Exactly. If hyperscalers delay adoption or choose larger competitors like Coherent, Broadcom, or Marvell, POET's growth projections could collapse.
The classic nobody ever got fired for buying IBM syndrome.
Right. A massive cloud provider might just go with Broadcom because it's a known massive entity. The enterprise hardware world is deeply risk-averse when it comes to supply chains.
And that leads directly into the second major risk.
Dilution and cash burn.
Right. Burning $56.70 million annually means they may need to raise more capital.
And that could dilute existing shareholders. Your personal slice of the pie gets smaller because they baked more slices.
So how do we reconcile that? MMCAP, this massive hedge fund, just bought in. Surely they know the company is burning cash. Why would smart money buy into a company knowing their slice is likely going to get diluted?
Well, MMCFP's investment suggests institutional money is pricing in this exact dilution risk. They believe the projected 146% annual revenue growth more than justifies it.
Oh, okay.
And if profitability is achieved by late 2026, future capital raises would be at much higher valuations. Raising money when your stock is trading at $20 is vastly less dilutive than raising it at $5.
So what does this all mean? How do we take all of this technological validation, the financial vectors, the institutional backing, and turn it into actionable timelines for you over the next 3 to 12 months.
This is where we lay out the catalyst calendar.
Let's hear it.
The most critical near-term catalyst is March 30th, 2026. That's Q4 2025 earnings. The market expects an EPS of -39 cents.
Okay, so what happens if they beat that?
A beat here, with positive design win commentary, could trigger a rally targeting the $9 to $11 range.
Which is a 35 to 65% upside.
Exactly. Then, looking at Q1 and Q2 of 2026, we have industry conferences and Q1 earnings in May and June.
What are we watching for there?
If hyperscaler partnerships or accelerated revenues are announced, the target moves to $12 to $15. That's an 80 to 120% upside.
Incredible. And late 2026.
That is the profitability inflection point. Achieving JAP profitability could see the stock re-rate to $18 to $25 based on peer multiples.
That would be a dramatic re-rating. Yeah. Now, for the aggressive growth accounts out there listening, let's outline the recommended trade structure.
Risk management is everything.
Always. We're looking at a 6 to 12-month swing trade here, keeping position sizing strictly to 2 to 3% of the portfolio due to microcap volatility.
Very important.
And crucially, utilizing a stop loss at $5.50. That is just below the institutional buying signal we saw from the hedge fund.
It protects your capital if the fundamental thesis starts cracking.
To summarize our journey today, Pola Technologies represents a high-risk, asymmetric reward opportunity right at the heart of the AI infrastructure build-out. They are backed by award-winning tech and new institutional money.
And I want to leave you with a final thought to mull over.
Go for it.
As the AI revolution matures, the most astronomical gains historically haven't always come from the companies building the end products. They come from the invisible, highly specialized components that keep those products from breaking down.
The pickaxes and the shovels.
Exactly. If optical connections are the true physical speed limit of artificial intelligence, how much hidden wealth is currently sitting in the unglamorous plumbing of our data centers, just waiting to be discovered by the broader market?
That is the perfect question to end on. Thank you for joining us today, and we will see you next time as we continue to uncover the catalysts shaping your wealth.